Welcome to a new kind of exploration. What you're about to see today isn't a highlight reel, and it's certainly not some showcase of unrealistic overnight success. Instead, it's a deliberate, fully documented, and completely transparent look into the actual mechanics of algorithmic market execution. Welcome to the GoldMining Europa Explainer. Think of this as a strategic documentary series where we're going to strip away all that noise and typical trading bravado. We're focusing entirely on the cold, hard realities of trading the euro against the US dollar.
So our foundation begins right here. We're tracking a live, real cent account, and it launched with a starting balance of exactly 2,500 cents. To put that into perspective, that's equivalent to about 25 US dollars. Now, the objective of our campaign is straightforward, but it's deeply strategic. We're navigating these markets to reach a 10,000 cent goal. You might be wondering, why denominate the account in cents? Well, it allows us to maintain absolute mathematical precision and risk control. It completely removes the emotional weight of looking at massive dollar figures. It's all about percentages, patience, and the process.
As the saying goes, every long-term trading account begins somewhere. This week marks the opening chapter of GoldMining Europa, a strategic USD trading journey focused on discipline, transparency, and long-term progression under real market conditions. There really are no shortcuts here. Today, we're diving into episode 01, the launch week, to establish our baseline of consistency right from the starting line.
But before we jump into the micro execution, we really need to understand the macro landscape. So why are we seeing this sustained downside pressure on the euro? Honestly, it comes down to a stark divergence in central bank policies. We're operating in an environment where Federal Reserve strength and resilient U.S. Treasury yields are just continuing to bolster the U.S. dollar. On the flip side, the European Central Bank's outlook presents a much softer stance, especially amid shifting inflation expectations. And that fundamental divergence, it creates this heavy undercurrent that's pulling the EUR-USD pair downward. Our strategy doesn't try to fight this tide. It aligns perfectly with it.
Now watch how that macro narrative actually translates directly into the micro chart structure. If we look at the M15 MetaTrader 5 chart from our launch week, a classic stair-step sequence of lower highs and lower lows emerges. It's a very clear bearish continuation. You'll notice the automated expert advisor triggering sell positions, beautifully aligned with this visible downward structure. It's methodically stepping down right alongside price action. It's just capturing that broader bearish momentum without ever attempting to predict the exact bottom.
Moving over to the execution log, we can see exactly how this builds in practice. Looking at the raw data straight from the MT5 platform, notice the repetitive, highly calculated nature of the orders. You're looking at a steady string of sell positions executed precisely during periods of downward momentum. There's no panic here, no erratic directional changes where we're trying to catch sudden reversals. It's just pure algorithmic consistency. The strategy simply recognizes the structural trend and deploys capital to capitalize on that sustained downside pressure.
The absolutely crucial element here is how risk is managed within that execution, and that brings us to a very specific number, 0.02. Across the roughly 10 completed trades this week, the strategy maintained a strict 0.02 lot sizing. Think of this as the cornerstone of calm, institutional-style risk management. By keeping that lot size strictly controlled and uniform, the account is essentially insulated against sudden, violent market spikes. It ensures that literally no single trade has the power to derail the broader campaign. It's measured, it's defensive, and it's incredibly disciplined. Another vital metric that sheds light on the strategy's behavior is the average hold time, which sits at 3 hours and 24 minutes. That duration tells a really specific story. The automated system isn't out there engaging in high-frequency, erratic scalping, just opening and closing positions in seconds. Instead, it's demonstrating a very patient, trend-following behavior. It identifies the momentum, enters the market, and then simply allows the trade room to breathe and develop over several hours, capturing a much more meaningful portion of the downward move. And right here, we see the uncompromising reality of live market trading perfectly visualized. On one side, you see the steady upward trajectory of our realized growth. We actually closed the week at a modest but positive 0.80%. But I want you to look closer at the equity line. That equity line clearly dips below the balance line, and that represents our floating drawdown, which hit a maximum of 7.13%. It's a surprising but absolutely vital reality check. You see, to capture that 0.80% profit, the account had to weather a 7% floating exposure. That is simply the cost of doing business in real, volatile markets.
Bringing this all together,
The transparent bottom line for our launch week stands at a gross profit of precisely 20.04 cents. Now, in the context of our 2,500 cent starting balance, that equals our 0.80% gain. A humble beginning? Absolutely. But it confirms the strategic, slow-burn approach of this entire campaign. The system executed exactly as it was designed to. It identified the macro-driven bearish trend, engaged with strict 0.02 lot sizes, absorbed a calculated drawdown, and successfully secured a baseline profit to officially begin our march toward 10,000 cents.
We've laid the groundwork, and the baseline is firmly established. But as we mentioned at the start, this is only the beginning of the GoldMining Europa journey. Future weekly episodes will continue documenting the real progression of this live EURUSD strategy, including both the profitable periods and the inevitable challenges every real account eventually faces. The real question is, as global volatility inevitably shifts next week, will this algorithmic discipline hold strong? Join us next time to find out. Real accounts, real risk, real progression.